Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with a long returning guest. I think almost 2 years now. Can you believe it's been about 2 years, Greg?
Yeah, it goes by quick. I think it was what around, before the pandemic, because it was
Before
about
the
a year
pandemic.
before then.
Yeah. So it's been a fun time. I've learned so
We
much
burned a
from you.
year through that without even like trying.
Exactly. We had so much to talk about. It was awesome. Hey, I actually want to do a topic that you and I have never done. I actually looked at our playlist and we've never done this one. And it is, let's focus on the first time home buyer, right? Owner occupied first time home buyer. We talk about investors and investing and all of that, but let's change it up. Let's talk to the first time home buyer. Maybe they've written 10 offers and gotten nothing. Maybe they're struggling now that rates are up 200 basis points. What kind of message do you want to send the first time home buyer, given where we are today and what you and I see coming in the future?
Well, this is definitely not the time to be buying. So that's number one. You're buying at the peak. You're buying when the market is shifting. And if you're just patient and wait a little while, and it's going to take, depending on the market, every market's different. And depending on where you're buying, it could be 3 to 6 months, maybe a year before you see, things revert back to, where they were and level out a little bit. But you just have to be patient. This is not the time to buy if you don't have to. And if you do, and you're still going to, make sure you're long-term, because if, like we saw, when the market changed 04, 05 and then through 2008 and 9, it took 12 years for values to get back to where they were. So you really need to think about that decision, because you're tying up a lot of capital and you're tying up a lot of potential opportunity for a long period of time if things do trend down for a while, and ultimately come back. And how deep will the markets correct? It just depends on the area. We're already starting to see it in our area. I've seen big price reductions. Of course, the prices were, kind of ridiculous to begin with, but we're seeing $50,000 price cuts on,
Wow.
$1 million houses at a time, $10,000 price cuts on, $600,000-$700,000 houses. So it's happening. So you just got to be patient. And then right now, the place to look is new developments, because the builders are going to adjust first. They're the quickest, they're the most nimble, and they can liquidate faster than what you're going to see from owner occupants that bought pre-run up here in the last 3 years. The values really went up in the last 3 years right after the pandemic. So anybody who bought before that, they have the ability to hold and to wait things out, but builders don't. Builders are building at cost, that are escalated right now, but they will cut and they will absorb a loss, a lot of these big builders, because they can spread it out over the country and average it out. So yeah, I'd keep your eyes on the new construction market in your area, because that's where the deals are going to show up first.
See, I think that is such amazing advice. And that's why we are so lucky on this channel to have experts with different experience. You are my builder, right? None of my other experts have ever built anything other than maybe a small ADU. You were doing this. You were doing this in the last environment. So I think that
it was there in resort markets, traditional second home markets. Those, will start to take a hit as the housing market shifts. So if you're looking to be in one of those areas, the time is coming for those areas. So you got to pick your markets, pick your spots, and just be patient. And it's going to come back around. Now it's kind of somewhat of a wash, because interest rates are going to be higher. So your payment's going to be higher, for less house, but it's all going to adjust as prices come down, payments go up. So it's all relative versus where we came from. But prices went up exponentially, out of line from where they should have based on interest rates, but it'll all readjust, and it's 6 of one, half a dozen of the other. And, like I said, my first house was 9.75% interest. So even at 5% now, that's still a great interest rate. The problem is most people that we're talking to or are listening to this, have never seen rates at this level. Number one, they've never seen a bear market. Number two, it's just been bull market since 08, 09, when the Fed jumped in. Well, 2010 probably, values took a while to come back, but it's been uphill in values, because from the bottom of 2008 and 9, obviously it's been uphill ever since then. So yeah, a lot of people are skewed in what their understanding of the housing market is and interest rates and things like that. So you got to take it all in perspective.
Yeah, there's a couple of things I would tell that first-time home buyer. First off, probably congratulations, right? A lot of folks who probably were stressed out 6-9 months ago for constantly missing out. What I would tell you, it kind of like Greg says, right? You're going to be going into an environment where it's just slower. You have time to breathe. You can write off. Folks, we're going to a market where you can write offers below asking. I know it's shocking, but it's coming. I think the advice about farming or going to builders is awesome, because you're right. Builders have to sell. Homeowners don't, especially according to Black Knight, right? 50% of mortgages, Greg, are 3.5% or lower.
Mm-hmm.
Those people don't have to sell because A, where are they going to go? B, they got to live somewhere, and it's probably cheaper to live in their home than rent. So we're going to have supply destruction like we have never seen before. On top
Well, and
of
let's qualify that. Everybody liquidates. Everybody sells sooner or later. So those people, that 50%, they're going to be sellers at some point.
At some point.
Yeah, at some point, but they don't have to. So they're not motivated necessarily until they have to sell, and as things adjust. And then with builders, the other thing to kind of qualify that is, again, you got to wait for the shift. Like I had somebody reach out and ask about, should I ask my builder for incentives since the market's shifting? And you said to go to builders first. It depends. If they're in a position where they have to do that, then absolutely. So there's incentives that builders can offer to help with down payment assistance. There's first-time home buyer assistance out there, different income levels. There's different things for different income levels. So you want to make sure you explore all those opportunities. There's also premium interest rate loans for first-time home buyers and things like that. So there's a lot of opportunity for first-time buyers. And your time is coming, and things will change. They always do. There's peaks and valleys, and things correct. And we talked about in the last episode, opportunities and recessions. That's one of the opportunities. When the housing market goes into a recessionary environment, creates opportunities for people that are looking to get their first home and things like that.
Yeah, I think first-time home buyers, your time is coming in all markets. And the idea, like I tell my students on investments, is write a bunch of offers that are great deals to you. Right, the last 2 years, like writing 50K over and waiving all conditions, that's not normal. That is not a sign of a healthy housing market. We have left that market behind. The Fed broke housing. It's gone up 250 basis points in 100 days, which is crazy. So use this time to get a good deal, right? And as Greg says, it always adjusts. You might have a 5.5% interest today, but who's to say in 5 years it's not 4%? Then you could refi, and I mean, it's just
it always changes. And if things head the way that I think they will head, that the Fed will reverse course and things will change and rates will come back down, then you can refi, and it's all kind of a wash. But the other thing too is, in this world that we're in now, remote work, where a lot of companies are not requiring you to work on location, that you can work from anywhere, you can explore housing markets anywhere, and in this country and outside the country, international. So, I mean, just because of what you're seeing, again, real estate's hyper local. There's a lot of markets right now where you can get a lot of house for the money, compared to other markets. The market I'm in, it's very small, and, it's expensive. And, if I go an hour south, away from the DC area, metrics change by 50%. Housing is 50% cheaper in Richmond, Virginia, than it is around the DC Beltway. It's kind of always been that way. So it's really interesting. And then you can go further into the, Hampton Roads area, so when you look at markets in Florida, the hot markets, it's just crazy. There's no inventory, prices are out of control. But if you move into other areas of Florida, it's very different. So, that's the other thing to think about. Do you have to be where you're trying to buy, or can you move somewhere else and
great advice.
You can buy more house, and you've got more options, and, things like that. And again, that's where, like I said, when you follow the home builders, they might be in some markets that are shifting quickly, where you can get some really good deals because they want to just liquidate and get out of that market. So
it's funny you bring this up, because I've heard your story a couple of times. Your first home that you talk about at 9%. I think you talked about having a 3-2-1 buy down, if I remember our story correctly. Lennar, I was copied on a advertisement from Lennar, or I guess it was an email that was sent to a bunch of buyers. Lennar now is offering in select markets, back to your point, know where you are, 2-1 buy downs. Right. So they're going to buy the rate down the first year by 2 points, buy the rate down 1% the second year, just to help people qualify. So it's like, that's what Greg had, or at least a version of it. So
that's your first sign right there that builders are having trouble selling and people can't afford
local markets, right? Very low specific. So
you're
right. It's coming. It's coming, folks. Do the work.
But it takes time. So, that's the other thing with the younger generation, is they want things now, and, things take time. And it could take minimum, we're already starting to see it in some markets, but more escalated in the next 2 to 3 months. as rates continue to rise, and I mean, we got to 5 pretty quick, so we might get to 6 and 7 pretty quick. And if we do, you're going to see it change much more rapidly.
Oh man, we get 7% this year. I'm not saying we will, but if, lights out, game over, done.
Yeah, that's a whole different ball game. Even 6%. I mean, that's
6 is bad.
You're cutting 7? The values of what somebody can afford slam in half at that point.
Yeah, again, I think we did a prediction episode. Both of you and I predicted higher rates. We both predicted, I think, high 5s by the end of the year. Boy, did they go up fast. Yeah,
it's pretty wild, and it's just going to continue, especially with the market doing what it's doing, because mortgage rates are based on the 10-year, and 10-year is over 3% now. So rates, we'll probably see mid to upper 5s, going into next week.
Yeah, the 10-year closed Friday at 3.149. The highest the 10-year has been since 2018 was 3.25. 3.25 broke housing in 2018. We could be there next week.
Yeah. So, which is good. The housing market needs to cool off, because it's been frustrating for a lot of people. And again, just be patient. It's like the markets. You have to be patient. When you're not, that's when you make mistakes.
Exactly. What I would tell a first-time home buyers, we wrap this episode up, is we are leaving the most extreme seller's market I have ever seen. And, again, do the work. Your market, all real estate is local. Have your buy box. All markets will lean towards getting back to balanced. Some markets may swing right past balance to a buyer's market. So do your work. I will tell you, Greg, that I still do not see a national housing price decline. That's when you add all the markets up and you do the math, but there will be some markets that get hurt. Any closing thoughts? And then how do people find you?
Yeah, I mean, you'll see a decline in the average price of a home nationally, because they use an average. So you'll see that, obviously, but to what degree and when and how fast, who knows? But as long as rates continue to rise from here, you will see prices adjust nationally.
Yeah. Okay. I like it. And then how can people find you?
Yeah, gregdickerson.com. That's where all my info is. Go check it out.
Thank you, buddy. I appreciate you.